How do I select mutual funds with low expense ratios?
It's a wrong question, practically, because expense ratio should not be the parameter to decide a fund. Expense ratio can be one of the parameter to select a fund. Okay. So we keep reiterating this to our team and our investors, everybody, whenever we get an opportunity, that looking at the cost is the only parameter to select a fund, or looking at any parameter as one single parameter to decide a fund is a blender. Like I have come across people select only because of brand, only because of expense ratio, only because of returns, only because of sector, only because of small cap, mid cap categorizations. So I think everything is related to the purpose of investing. A purpose has to be met by the investment you're doing. For example, I want to do a charity of 1 crore rupees when I'm 55. Assume I'm 30. So the purpose is 20 years away from today. So I what is the amount of risk I can take to do a charity? Makes sense. Correct? No. So if I'm doing a charity, I cannot decide today to give 1 crore and I'll give you 10,000 rupees there. Not possible. So I may take in this example, I may take a moderate risk. Okay. So just because you are want to give more money during charity, during the maturity or during the end of the 55th year, to make more money, if you think I buy a low expense ratio, then I'll make more money. That's a wrong statement. I'll give you live examples. Equity investing was never free in India before. It was always had a brokerage cost. It was starting from 0.25% to 1.5%. Okay, that's within limits of SEBI's regulation. The same is applicable across the globe. Even in the globe, it's not free. But in India, after Zerodha or some other brokers came in, discount broking came into picture. So the equity investing becomes zero. That means what? Low expense ratio. Do you agree? So by reducing expense ratio, I have not come across people making more wealth because of expense ratio. They are making more wealth because of discipline. Maybe they're making more wealth because of strategy. They're making more wealth because they know what to do. Okay. Third, I think it is high time for us to start looking at only cost as a parameter to select. That is a marketing strategy of many companies to trap you into system. I call it as save cost at any cost. So to save 50 paisa, 1 rupee expense ratio, you are looking at bigger picture. So one more flop I'll tell you in the system, NPS, National Pension Scheme, is one of the lowest expense ratio fund available. I think it's between 0.05 paisa to I think 0.25 paisa, which is almost one tenth cost of mutual fund. Okay, but I could see a divergence in return. And diversified equity fund in a mutual fund would have given a return of 10%. This fund only gives 7.5% return. Now, I'm not telling because of expense it is like that. It is a divergence because they cannot spend so much of money. Their investment approach will be different than the investment approach. They may not put money in research. They may not pay heavy to fund manager. The structure itself is like that. It's like somebody who has 25 years of experience. You are expecting him to work at the cost of 1/10. How it is possible? He is damn expensive. Okay. So, however, we should appreciate SEBI with respect to expense issue is concerned. They come out with a consent paper. Now it's a part of the process that when the fund is growing bigger and bigger, any mutual fund is growing, the expense ratio comes down. Because from the absolute terms point of view, you don't need so much of money. So the expense ratio starts from less up to 250 crores, first 250 crores, 2.25, next 250 crores to 2%, and something it goes on. And the maximum limit has gone as 50,000 crores. Okay. So anything beyond 50,000 crores, I think expense ratio comes as low as 1%. Okay. So there is a clear cut intent behind it by the SEBI that if the fund is growing bigger and bigger, automatically the expense ratios will come down. Okay. Since you spoke about expense ratio, I'm reiterating this. Yes, I think expense ratio you should not give weightage more than 5%. Because if lower the cost, if you can make higher the money, it's like for example, if you don't smoke, if somebody is smoking 3 cigarettes a day, you tell him don't smoke cigarette for next 20 years, you can buy a Mercedes Benz. It's not an example to give. Okay. Same thing people are giving example. If you invest in a low expense ratio fund, you will make 25% more return. Boss, He doesn't even know how to invest. He doesn't have knowledge to hold money when things are not good. So these are the things we should focus on. I think psychology, finding a right financial advisor, looking at a goal creation, and choosing to a plan and stick to the plan. These are the most important pillar than expense ratio. I think this is a wrong question to answer. I think wrong question to implement. You can always ask this question, but it's a wrong question to implement.